Morning, traders. Gold just smashed 3,870.75 new record highs, and this parabolic move shows no signs of stopping. But let me break it down for you, the drivers and some levels that we need to watch, plus also taking into account that it's the 30th of September today. Okay, so it's end of months flows as well. We need to take account into that. So what happened? And gold is rising to new highs unstoppably. For how many times? I haven't really counted this year. There are two major forces that they are driving this surge. U.S. government shutdown. Uh, this has come after Congress failed to agree yesterday on a uh, fiscal budget. If there is no agreement by tonight, this means that there is going to be no jobs release on Friday. Okay, and Fed would literally fly blind into the October meeting. Currently, markets are pricing in 89% of a rate cut in October and another one in December. Now, interestingly, also we also have China's Golden Week starting tomorrow. This is an 8-day market closure, and it removes the world's largest gold consumer from active trading. Historically, this creates a lot of volatility in related stocks as well as, of course, gold. Gold has seen typically declines ahead of the Golden Week, but we don't see this currently happening because there are other things in the mix that they are keeping gold higher. But Fed uncertainty plus Chinese market absence might be actually the a combination to let prices move higher as well, since the norms seem to be different this time around. So on technical terms, we have broken out, of course, this triangle pattern a while ago, right? If you recall. The interesting thing is that using the Fibonacci extension tool in some sort of Elliott wave terms, I would say, because we connect the opening range to the end of the triangle, it brings us to the 3,920. Okay. Now, of course, there is different ways to use different tools, but if we just reused that specific one, we also see that the 200 Fibonacci brings us to around 3,885. This is close to where we actually are. This is consider this as a duplication of the measured move projection. Okay. So, what are the important levels that we need to look at here to the downside? Because we just talked about the ones to the upside. Of course, the 3,830, and then we'll go to the swing low at 3,790. Losing that level would probably get us down to, I would say, 3,750 because this is an active level, which looks at an active activity, high activity in this within this short-term triangle pattern, and then below that, of course, we open the door to 3600s. But importantly, we also have this channel to take into account. Okay, so the idea here is that as long as we are trading within this channel, okay, the trend remains to the upside. Now that also signals potential upside to something like a potential combination of a strong level to the upside and the channel. Perhaps maybe we're not going to see that. But how I'm seeing things currently playing out, because we have had some sort of divergence here on the 4 hour that seems to be breaking out. Okay, so there is no divergence, or currently it's just like there is flatness on the RSI. Of course, price are moving up. So I think how this could play out is we could see this moving higher up and create a second peak on the RSI. And then eventually we'll see a decline, another leg up, and that would eventually constitute the fifth wave to the upside. And on the RSI, we could see something like this. And this would create a divergence here and eventually, just below the 4K, perhaps even the 4K, who knows, 3900s, we could see a pullback or an actual correction, which means a much deeper move to the downside. So you might be considering how to play this. Well, to be honest, I think currently, and in terms of how extended we are, I think it would make a bit more sense to look for profit taking um, um, drivers to the downside, if that makes sense. So I would be probably looking, although risky, you don't want to go against the trend. Okay, um, we'd be looking for the 3900s, nice and round. Of course, that might take a while to get there. It's not like it's going to happen today, or well, obviously, to be fair, if there is no good outcome coming out, the U.S. government shutdown, and there is no agreement on the budget, then I think we're probably going to see this continue higher. But given, of course, tonight is going to be the last sort of the 11th minute solution, perhaps would be looking to kind of get into this potentially uh, if good news come out tonight, okay, or by the end of the day. So initially, we'll be looking for a short-term sort of move to the downside, put the stop loss above the 3900s, just around level. 3910 is good, and potential move down to around the 3791. This, of course, would be a secondary level. Typically, we break down the trades to two or three different partial profits. So one would be the previous swing high at 3830, and then break even once your first target is out, and then continuation to the second target with a trailing stop. Of course, increasing risk would suggest this could go all the way up to the 30 well to the even 4K. Okay, so the immediate levels to pay attention to are the 3850 as well, the support at 138.2, and of course the 39 and the 3950 and 4K to the upside. Bottom line, gold is in a generational bull run anyway. US political dysfunction plus Chinese market closure uh, maybe create a trading window either way. And technically, we are definitely in uncharted territory. So there might be some sort of upside momentum, but the fact that we haven't reached these levels before, and in this particular macro and geopolitical landscape, then profit taking wouldn't be something that it would be out of the ordinary. So watch for those levels. Watch those levels. Don't try to go against the trend for too long, and remember that gold, you know, typically during uncertainty seems to surge. So that's your focused gold update. Keep it simple, and catch you next time.